Have you ever wished you could get inside the mind of a market wizard? Well, today's your lucky day. We're going to explore the trading rules of Ed Sikota, one of the most successful traders of our time. Alright, let's kick things off. Sikota isn't exactly a household name, but his trading prowess is legendary. In the 80s, he achieved staggering returns, growing one client's account by over 250,000% in just 16 years. Yep, you read that right. 250,000%. So, what's Sikota's secret? It all comes down to a simple set of trading rules. By following these guidelines, he managed to stay disciplined and level-headed, even during the most turbulent market conditions. So, are you ready to learn from the master? Let's dive into Sikota's 5 trading commandments. Rule number 1. Cut losses early. This one is a classic, but it's so crucial that it bears repeating. As Sikota says, your primary job as a trader is to protect your capital, making money come second. The key here is to cut losses early. Don't wait for the market to turn around. As soon as the trade goes against you, accept the loss and move on. Embrace it, even. Sikota's wisdom. Losing a position is aggravating, but losing your nerve is devastating. Let me give you a real chart example. Imagine you are trading breakouts. The market is trading upwards, and you are following the trend, so you decide to trade this breakout. The market breaks through the resistance, and you enter your trade. But suddenly the market reverses, and you feel stressed. You don't really know what to do, so you move your stop loss because you think the market will return. But what happens next? The market keeps going down. You can keep moving your stop loss for days, and the market will keep going against you. If you don't cut losses early, you can lose your entire trading account in one trade. So when the market goes against you, remember what your friend Sikota says. Your primary job as a trader is to protect your capital. Making money comes second. Rule number 2. Ride winners. On the flip side, when you're right, let those profits run. The secret to consistent profitability isn't having a sky-high win rate, it's about making more on your winners than you lose on your losers. Sikota suggests using an end-of-day approach to identify trends and patterns, which can help you stay patient and ride those winners. But most importantly, you need to walk away from your trading screen and give the market room to breathe. Let me give you an example. You spot a trading range and you are waiting for the breakout. Once the breakout happens, you notice that the breakout is strong, and it is a great opportunity to enter the market and ride the new uptrend. You place an entry here, a stop loss, and the target is the next level. What happens is that the market will play on your nerves before going to the targeted level. As you can see here, the market retraced back to retest the resistance that becomes support. To be honest, nobody knows what is going to happen when the market makes this retracement. Will it keep retracing, and then the market will go down? Or will it retrace and then make another move upwards? Nobody knows, not even Sikota himself. But the difference between Sikota and other average traders is that when he enters a trade based on his own rules, he has a stop loss, so he does not care what the market is going to do. He knows his risk, and if the market goes against him, he knows when he will get out. So if the market moves in your favor and then turns a little bit against you, don't get afraid and close your trade. You have to set and forget the trade, because the goal is to ride your winners and